What's up, guys? Welcome back to Order the Two Comic Club. Justin here, and today is going to be a pretty important video because it's kind of talking about where I think the market is going to be going next year. So even though this is going to be a recap of, August 8th and 9th, I am going to be talking mostly about stuff happening right now, December 20th, as I'm filming this. I'm going to tie them together because I actually like that I'm behind on this particular video because we can verify and check to see what the predictions were 3 months ago to see if they were accurate, and it brings up a very, very important point about investing, and I think it is something that we all need to think about and learn. And some people talk about this on their channels, and it's good advice, but I want to show you firsthand how it's happening. So let's just get the house cleaning stuff out of the way and show how the markets did on August 8th. So the Dow, was half green, half red. The NASDAQ was green, the Dow was red. So it was a pretty mediocre day, and guess how much we made? We made a whopping $21. and so you can see here, NVIDIA did actually quite well. This was back when NVIDIA was doing well. And other stocks, you can see Amazon was doing well. Again, at that time, Amazon was doing well. And then if you look at our losers, we didn't have too many. Disney dropped a little bit, Tesla, Alibaba. So it was a pretty uneventful day. Now, the next day, we had the Dow was doing a little bit better, but then it started going down again. So not as good as the day before. And you can see our winners and losers. But we did somehow skate by with a win, made about $1,500. And you can see our big winner was Roku. I might leave a comment below on what happened with Roku if anything happened. I didn't check on them in the news, so I don't have any information about that. But I'll try to post a comment. And look at our laundry list of losers. A lot of small stuff. Luckily, they were all offset by our winners. And yeah, so, okay. All right, so now I'm going to talk about what the big part of this video, which is how everyone pretty much is wrong at least half the time. I mean, no matter who you talk to, any analyst on TV, any even financial YouTube channel you watch, including mine, everyone's going to be wrong half the time. I think that's the conclusion I'm coming to. It's very rare to find someone who's right almost all the time. It's like pretty much impossible. And you just kind of got to go with your gut. Again, I'm not a financial advisor, so I'm not telling you to buy anything. I'm just telling you it's good to go with your gut. It's good to do your own research. It's good to, stick with what you know. Don't invest in companies you've never heard of or don't know anything about. That's kind of why I got out of some of those companies I used to invest in. I just wasn't interested in them. I didn't want to follow them. I didn't know much about them. So I stopped investing in them. But let's just start by showing you. I want to show you, we're going to talk about some analysts that were wrong 3 months ago in their predictions, and then we're going to talk about a chart that is actually really scary, and it's making me think that we might be in a bear market, and we're going to be not only like a bear market, I guess a bear market, recession, pretty much the same thing. But yeah, stocks are going down in the future, in my opinion. I'm not happy about it. There are some stocks that can go up, and we'll try to talk about that too, but I don't want to make this video too long. But anyways, let's just, I got to find these videos, so hold on one second. All right, so I'm going to grab the camera here real quick and show you. This was a video I was watching, stocks to buy at all-time highs. This was back in August, and listen to how bullish everyone was.
From the banks recently, with JP Morgan leading the way, and I think they will continue to do so. Ultimately, I think the S&P is a buy above 28.49, and I trade the
28.49. Okay, we all know it's way lower than that.
And I think it's an extremely bullish move that we're seeing, and we're going to see those all-time highs taken out in the S&P very soon.
Ari, what do you say about Bill's?
All right, I want to show you one more thing about this. Let's see what else he says.
Last week talking about it, recommending it into the print. After the print, it's up. Add more to it. I think the important point about Apple for us, this is a breakout through 6-year resistance relative to the market.
So he's obviously very bullish on Apple.
Tailwinds as well. The percentage of analyst buy ratings has dropped to 60%, which is the lowest in over a decade.
Yeah, I don't know what you meant by that.
Analysts come back as well. You got contrarian support breaking out to the upside. Strong sector. Buy Apple as well.
All right, Ari.
So he's saying
so much for right up your
yeah, okay. So there you go. These two analysts, Ari Wald of Oppenheimer and Bill Baruch of Blue Line Futures, all they could say was buy Apple and buy the S&P. Everything's buy. Like, everything is on fire. And we know how that played out. If we had taken their advice and bought Apple at 207, yeah, we would have made money for a little bit when it hit like 220 something. but then we lost a lot. And so I want to show you one more thing. Okay, I'm going to show you one more thing now. Let's go to the next article. This article is talking about like money flows, and there's this guy who goes by the name of Nigam Aurora. He started an Aurora company. What's it called? Hold on. There's so much crap. I did so much freaking research for this video. Okay, the Aurora report. He started this thing. Anyways, he was talking about money flows, and money flows like smart money. So like, I guess experienced investors versus momentum investors or momentum people. And I'm going to post a chart on the screen right now. And I want you guys to pay attention. I'm going to overlay some of my own information on top of that. I just need to find the freaking chart now. I'll post both charts on there so you'll see. So this is talking about, if you look at the left, all the stocks that are in question about this chart. You have the smart money and how their sentiment is on these stocks and what the money flows are doing. So like, for example, Facebook, smart money is mildly positive. I'm guessing that means there's some, the smart money are putting some money into Facebook. They're investing into Facebook. The momentum crowd is very positive about Facebook. So on that top row there. And then the short squeeze kind of, it says a very positive indicates high probability of a short squeeze. So again, that a short squeeze can make the stock go up because the shorts are trying to cover their position. But anyways, I wrote down the price of Facebook in August and then a month later in September. And then I did the same thing in September and then did a month later in October. And what I found was the momentum crowd, which is, I guess, not the smart money, it's just the momentum crowd, they were right just generally about the stock. They were right 5 times between these two charts. So between like August to September and September to October, they were right 5 times and they were wrong 6 times. The smart money was right 4 times and wrong 5 times. Because I didn't count when they were neutral on a stock and the stock went down. I didn't count that as a win or a lose because they probably weren't putting money into the stock anyways. So, I mean, you could count that as a win, but even so, 50-50 pretty much. And then comparing smart money versus the momentum crowd actually won. If you compared to like for example, look at the top column for the first chart on the left. Go to Apple. So you see that the momentum crowd was extremely positive and smart money was only mildly positive. So assuming that the momentum crowd was putting more money in to Apple, they would have made a higher return in that month because Apple went up from 207 to 221. So versus the smart money, the momentum crowd actually beat them 7 times and only lost to them 4 times. So the overall winner was the momentum crowd, which kind of goes to show you, if they're called smart money, why aren't they being able to beat the momentum crowd? You think smart money would be smart and be winning most of the time. And so this kind of just goes to show you that, like, it's hard to know what's right. It's hard to predict the future. You just kind of have to stick with your gut. And another thing I want to mention is that even no matter how positive people can be, you can't underestimate like the power of just the negative crap that's happening in the world. Like China trade war tariffs mixed together with the Fed. Those are like 2 powerhouse opponents that we just cannot beat. Like, as much as Facebook wants to go up and as much as people want Apple to go up, the Fed is just going to be like, nope, we're stomping it back down. And people were super bullish on Apple at 207. They thought it was going to go to 222. Fed was like, nope, we're pushing that down, and we're going to push it down even more because screw you guys, that's why. And they just do what they want. And like, you can't really fight it. I don't think you would need like 10 companies reporting the most redonkulously good earnings all at once. And then Trump making a pact with China. I think that would be the only thing that can snap this market back into a rally, like a good rally, or go back to the bull run. At this point in time, I'm super pessimistic. I just don't see a lot that can happen to make the stocks go up. Now, I'm going to finish the video by showing you this one chart, and this kind of puts it more into perspective. This one article was talking about the scary chart, and I'll post a chart up here on my right. I'll post a link to the article. I'll post the title on the article because I can't find it amongst the clutter on my computer screen. But this chart is talking about the price to sales ratio for the S&P 500, and it's showing that now that red line at the very top right of the graph is double of where it was prior to the dot-com bubble and that recession, that little thing that happened there. Now, I want to show you this other thing because this is the chart for the S&P 500. And on the top of the chart, that top part of the chart is from 2000, to 2001, like right when the bubble burst. And you can see the resemblance between that and the S&P 500 on the chart below it, which is from January to August of this year. You can see some very, very, very similar traits there. And they're all kind of marked there that it hit the peak in the beginning of the year, so like March in 2000, January this year. Then it kind of fell. We had that correction. Then it came up for like 5 or 6 months. 5 months on the 2000 part. It's gone up for 6 months in 2018. And this is why I kind of like that I found, if I had scrapped all my old videos, I would have never seen this, and I probably wouldn't have came to the conclusion that I came to. So I'm kind of glad that I've discovered this old article, because now we can see how their prediction was. Now, the top of the chart, they predicted that because of what happened in 2000, you could see the stocks went down. So they're predicting a similar thing happening in 2018. And at the time, we wouldn't know because we would have to wait for 3 months to see what happens. Now, since I'm reporting now on December 20th, we can actually see if they were right or not. So I'm going to overlay the chart that's happened with S&P, and you can see what happened. Ready? Okay, so there's the chart. And I'm going to kind of toggle it on and off so you can kind of see how it matches up. What I did was I resized it so that is exactly the same dimensions as that chart, so you can see there how it's the same. But if you look at the rest of the chart, it does the same thing. It does almost the exact same thing. It went up for maybe an extra month, maybe, and then boom, just dropped. And so, I mean, it's just scary how eerily similar that is to that chart from 2000. Now, many of you might think, okay, Justin, yeah, there's a lot of similarities, but there's a lot of stuff happening now that wasn't happening in 2000. There's a lot of differences, and there are. And I mentioned it last year how the PE ratio of the S&P, this was from an old video, is much lower now than it was, and it was really inflated in 2000. But still, I mean, if you look at the chart, it's just crazy. And yeah, so I'm personally, I mean, and plus, like, there are a lot of positive things happening with companies like self-driving, with Bitcoin. Like, there's a lot of cool things happening, but with the Fed and Trump's tariff dispute with China, I just don't see anything being able to fight back against them. So I'm personally going to be adopting a much more defensive strategy. I already lost a crap ton of money, and you'll see that as I upload more videos. I drop a lot of money. It's a good learning experience. I'm going to talk about it in a future video, what I'm learning, but I just need to go with my gut, and I'm looking at these charts. My gut is telling me that we're not going to have a great 2019. There's still some stocks that could do well, and I'm running out of time to talk about that now, but there's like stocks like McDonald's, Walmart. There's certain stocks that do good in recessions. I could probably talk about that in a different video, but I might be putting my money into that or holding some cash. I'm just going to be more defensive, and that is why. So, sorry to end the video on a crappy note, but that's life. It is what it is. You can't always have a bull market all the time, as much as I would love to, and that's just how I'm doing it. I really would like your guys' input, so please comment below if you have any input at all about what's going on. Do you think we're going to go into recession for a year like the chart suggests, or do you think we can snap out of it real quickly? Do you think that people are overreacting to the Fed? Because the Fed did say they're only going to raise rates most likely twice next year, which people thought originally 3 times. So I thought that would kind of help the market, but it doesn't seem to be. But what do you guys think about that? I really want to know. So yes, thank you guys so much for watching. If you like this video, hit that like button and subscribe. That would help me out a lot. And check out the Amazon affiliate links if you really want to help me out. They help go to the channel, like that. I get a little commission if you click those links. Thank you guys for the subscribes. Thank you for the patrons. I love you guys so much, and hope you guys have a great holiday season, even though I'm going to upload a video tomorrow, but still, hope you guys have a good night. So we'll see you tomorrow. Hey guys, thanks again for checking out this video. If you want another way to support the channel, please check out that Patreon link up there at the top. You get access to my private Discord server where we chat about different companies we're looking at investing in. I also post my current trades in real time, as well as news headlines with little mini summaries. And you can also get discounts on any merchandise that we sell, like a shirt like this, for example. And if you want to just subscribe to the channel, I would appreciate that as well. You can just click that black logo there at the bottom. Thanks again for watching, and we'll see you in the next one.